Hi, my dear friends. Recently, I watched a movie in which habitual borrower goes to a lender. He asks for money. That lender is very clever. He says that, okay, I will conduct you a test. You have to run from here to the tree and come back. So, how fast you are coming, based on which I will give you the money to you. I will lend you. So that borrower, he as fast as he can, and then touches the tree and come back gasping for breath. He asks for, okay, I ran as fast as I could, please give me the money. He says, the lender says, no, sorry, I can't give you the money. He says that I ran very fast. He says that before lending money you are able to run this much fast. After lending money I will not be able to collect from you because you will run even faster. So sorry, not possible. Friends, this is a very comical incident. Similarly, in my opinion, even the institutional lenders, they conduct a test. They just assess you. So based on that, whether you will be giving money or not. So that the joke is conducting a similar, that is for a joke. Here, institutional lenders, they are a bit serious about it. They will be going through your credit history. So credit history basically forms of two components. One is that credit report, other one is that credit score. Credit report is nothing but the past experience of the lenders with you. So whether we have paid on time, payment history, they will say your employment status, then current debts, and then they will see the type of credits you have got, and you will also see credit limits, how much credit limit you have used. So businesses may check your credit history. So before you are asking for money, and then they will assess you. Then the second is that credit score. Credit score is basically how much credit we can give. That is, they will based on the credit report, they will score you 350 to 900. That is called CIBIL report. We in India call it. So here the 350, whether you will be chances of you going NPA, they will see according to that credit score. So we will see it in detail. Please be with me in this video for entire video. You will get a lot of information about credit score, how you can improve it, how you can protect your family, even if you got a lot of credit. So you will see it, how disciplined you should be. These are all the context. After watching this video, you will be able to improve your credit score if you follow those methods. So please subscribe, comment, and stay with me till end of the video, my dear friends. Before going into the discussing about the credit score, we will discuss about what is credit score, who has made it. Credit scores developed by two different corporations. One is that FICO and other is Vantage Score. These two are different credit scoring models used by lenders to assess borrowers' credit worthiness. The FICO score is developed by Fair Isaac Corporation, is the most commonly used credit score in United States as well as in India. It ranges from 300 to 850. Other one is Vantage Score. Vantage Score is developed by Fairfax, TransUnion, Experian. These kind of companies have created. Credit score, all the things you should know, we will just go and discuss about it. What is credit score? Credit score, as I said, developed by two different companies. Credit score is a three-digit number. In India, we follow from 300 to 900 that represent your credit worthiness. And it is calculated on based on your credit history and financial behavior. Financial behavior means how responsible are you? Are you paying your loans, paying back your loans on time or not? So what are all the different types as we discussed earlier? So we'll discuss it in detail. Before going to that, what is the CIBIL score rating? You should know at least benchmark where I should reach. So you can check your CIBIL score even free of cost also by visiting CIBIL website. It will give you prior to 90 days what is the status. So CIBIL score here, if you see less than 600, means that approval probability is very low because your credit worthiness needs attention. 600 to 649, doubtful. So difficult to get approval because the lesser you got a CIBIL score, the higher will be the interest rate. Then 650 to 699, satisfactory or fair. So possibly you will be getting 700 to 749. So good credit score, approval probability also good. 750, anything above 750 to 900 is excellent, very high. So you should aim for excellent 750 to 900. That is the your benchmark. Minimum you should have 800 CIBIL score. So what all the things to do? So we'll discuss it in this coming slide. Why a good credit score is very, very important. A good credit score basically helps you get approved, loans approved on time, your credit cards and everything gets on time. Otherwise, what will happen? Even if you get a lower credit score, approval of loan, you'll be paying more interest. So once it has happened to me, somewhere broken period interest, as I told you in a previous video. So somewhere in broken period interest, a very small amount. I just forgot to pay that, but it was still more than 1 or 2 years old. So that 2000 rupees has hurt me around 0.25% in my car loan. So I had to pay. Even if I had paid at that immediately, it won't get reflected. So I had to pay more for my car loan. So you have to be very, very careful for this broken period interest, where and all you have left. So immediately you have to go and pay. So then only your credit score will improve. And it can also help you get a better interest rate, as I said, terms of loans and credit cards. So it basically like a good student in the class. He always gets the first seat. He'll get a better view. He'll get good marks. So he'll be in the good books of the teacher. He will getting better internal. His moral will be high. Similarly, in credit score also, if you keep it higher, definitely you will be treated better by the lenders. They will give you approval immediately. Thereafter, you will also get a lesser interest rate. We will see impact of paying 0.25, 0.15 rate, higher interest rate in a later video. How is a credit score calculated? You should also know how it is calculated. No, I just brought up a small chart here. First is, what is the weightage? Payment history. Payment history means very, very, very important. So payment history means whether you have paid on time, then type of credit you have got, and then how much current debts are there. These are all the payment history. So 35% they are giving for the payment history. Here, this yellow portion is 35%. If you are giving full marks means, so 35% goes for payment history. So if you want to take a loan, immediately you just check your payment history, whether you have paid in full on time or not. Second is that credit history. Credit history means what? What all the credits you have taken. So that forms a 15%. It should have come little below. So credit history forms 15%. Credit history, what all the credit usage, how much credit you have taken, how much credit usage, 30%. Credit usage means what? How much credit allowed. Is supposing if you got a credit usage level of limits of 5 lakhs or so, so how much you have availed your credit limit. So that is, if you got around 1 lakh rupees available, you have taken only 50,000. So then 50% only you have utilized. That is credit usage. That forms 30%. This gray portion is 30%. Credit history, yes. Public records. Public record is nothing but details about bankruptcy or collectibles in the past. So whether you have gone bankrupt or not, whether you have gone NPA or not. So all those things are determined by public records. How much it is available. Certain behaviors can impact your credit history also. Those behavior, right? Then inquiries. How many inquiries are made? How often your credit file is accessed? How much time people are going and checking your credit file? Whether this person. Suppose if you go to 10 different places and then ask for the credit. So each time he is logging in, now that is also impacting your credit score. So be very careful. Only if you know you will get the loan, then only you should go for inquiry. Unnecessarily, if you go and if it is declined means, that will also be in the history of credit inquiry. So be very careful. Don't do credit inquiries often. We will see everything in detail in the future slide. How can you improve your payment history? It's very, very, very important. We have seen this, no? Each one we will see how to improve upon it in the coming slides. How can you improve your payment history? Pay bills on time every month. Pay bills means pay dues every month. Otherwise, automate it. Every month on certain date, due date, automatically it should be debited from your savings bank account or any other bank account. So it should be done on time. Number two, monitor your payment history. So monitor, like I said, no, I have missed that 2000 very small amount. So likewise, you don't miss out. It will affect you. So monitor your payment history. If there is any broken period interest, if you have to pay any service charges, something like that, no. So go and pay immediately. Then use credit wisely. Just don't do every purchase over credit card or everything or loan. So that will affect your credit history. So where you are taking loans, how you are paying it back, then whether it is above above the certain percentage of your net take home salary or not. These are all the important criteria. Then your employment status, whether being unemployed, are you getting any loans or not? Sometime no, during the break period before one employment and another employment, some people are going and taking loan. So during that time, you have to be very careful and avoid co-signing and standing as guarantor of loans for others. People whom you do not know, or just like that, just for the sake of friendship, you also have to check your the person who is for whom you are standing guarantee. So whether that person will, because it will, if he is defaulting, automatically that credit will be transferred to your account and your credit score will get impacted. So avoid co-signing of loans, standing as guarantor for loans unnecessarily. If it is not absolutely necessary, don't do it. Lengthen your credit history. Do not close your credit account. Basically, closing of credit card and then closing of pre-closure and all. So lengthen your credit history. Basically, they will see the books how long you have been giving back the money to the your lender. So how long means how long you have been maintaining account. The lengthier the book, the your credit score will improve. Then use different types of credit. So one is that not going for too many credits, that is not the case. Use different type of credit. Home loan, that is mortgage loan. Second is that credit card, that is car loan. Different type of credits, you use it when it is necessary. If it is not necessary, don't use it. Then use different type of credits to pay back the money. We will also discuss it in detail. How can you improve your credit utilization? Credit utilization means keep your credit card balances low. So as I said, the balance how much you have to pay either minimum due or full amount. Try to pay full amount. Doesn't mean that to closing full amount you have to pay, you should pay and keep your credit card balances low. Use no more than 30% available 30% of your available credit. 30% means what? As I said earlier, if you got 1 lakh or 1 lakh credit, that is allowable limit, you only 30%. 30% means 30,000. Don't go beyond it. So that will help you improve your credit utilization. Then how can you improve your length of credit history? Length of credit is a factor that is considered when calculating your credit score. And to improve your credit score in this area, it is important to keep your oldest credit accounts open. So don't close your old credit card, return the credit card. Don't do that, but continue it, right? So that your credit history is open for a longer time. You are making payment on time. So people will think that, lenders will think that, okay, he has been paying this credit card for past 10 years, so he is credit worthy. He has not been once defaulted, so your credit score will go up. The longer your credit accounts have been open and in good standing, the better is for you to get the good credit score. Then avoid closing old credit accounts unless it is necessary, as like going abroad, those time and all you can close it, but don't close it unnecessarily. As doing so, you are shortening your credit history and lower the credit score. And additionally, avoid opening too many credit accounts. So that is also one thing, is that you should not close the credit account. And second thing is that opening too many, that will also lower your credit history, credit score. And how can you improve your types of credit? So type of mix of different type of credit. As I said earlier, credit card, auto loans, mortgages have a mixed bag of everything, so that you are able to pay all sort of loan, only credit card loan. So some people have got only credit card, they don't have any other loan. So taking money from credit card and paying it to the different place. So don't do that. You have credit card for X purposes, and then auto loan. Don't mix with auto loan, paying money through for auto loan through credit card, auto payment through credit card. What will happen? This is a different. You are using only one type of credit. So don't do that. Have a mix bag, right? Credit cards, auto loans, mortgage loans. Have a different account and pay on time. Don't apply for new credit accounts at once. So too many inquiries will happen. So too many inquiries will lessen your credit score. How can you manage your recent credit inquiries? Inquiry means a lender goes and does inquiry in your credit ledger. So a credit inquiry occurs when a lender and creditor check your credit report. So multiple inquiries within a short period of time can negatively impact your credit score. So don't shop around. Don't go everywhere before going to the loan. Go to bank A, bank B, bank C, bank D, and then ask them submit all the papers. Then they will see that the credit score is low. Then you are going to the next bank. Then you are going to the next bank. What will happen? This person is not able to get the loan from one place to other place. That's why he is going lot of inquiry. So that's how the lenders will think your credit score will go down. So you should be sure of where you are going to get loan. So do your own homework and then get it. So to manage recent inquiries, minimize their impact of even avoid applying too much credit at once. Only apply credit when you need it and when you are confident that will be approved. So don't do shopping around here and there. Don't do it. If you are shopping around for your loan credit, try to do it within a short period of time, as some credit scoring models club everything together. So being a benefit of giving a benefit of doubt to the people, so they are clubbing it, but don't do it per se. It is not advisable. Then, how long does it take to improve your credit score? Improving credit score takes time. Disciplined approach helps you to improve the score. Discipline means what? You have to pay your credits credit card payment or loan prepayment on time. So make it automatic, make it easiest every month on particular date, due date, it automatically goes. Don't delay it. It can take several months. So once your credit score goes down, it will not happen tomorrow. So if you pay the money, immediately your credit score will improve. Not like that. They will see the credit history over the period of at least for 2 years it will take. So it takes several months, even years to see significant improvement in your credit score. This includes paying bills on time, keeping credit balances low. Credit balances low means how much the credit available you are availing low. Avoiding new credit accounts, regularly checking your credit report. Then how can you monitor your credit score? Very simple. Check your credit report regularly. Go to CIBIL or go to make payment and ask for the report. So whether if your credit report is fine or not, then wherever there is a lacuna, go and address it immediately. Use credit monitoring services to stay on top of any changes to your credit score. Even any fraud is taking place, you will be coming to know whether your PAN card or anything else, some unscrupulous elements have used it or not. That will also you will come to know. So see the credit score, do the credit monitoring at a regular interval, at least once in a year. You have to go and check. It is important to research and understand the specific factors that affect your credit score. Work with a financial professional. Always take, if you are very busy, so ask the financial professional, financial advisors, ask them to monitor your credit report. So if anything goes below the limit 800 or 750 limit, below the 750, immediately you will be getting report. So you can find that wherever there is a lacuna, you can find it, address it immediately. So inculcate financial discipline. Very important is to inculcate financial discipline. What are the paying bills on time? So on time means if make automated debit. So that is one of the best way of paying credit card bills, and you have to pay even your mortgage and auto loans on time. Keeping credit card balances low. So keep the outstanding very low so that your credit score improves. Then avoid taking new credit accounts. So unnecessarily don't go for multiple credit cards and multiple mortgage loans, multiple car loans. That will affect your credit score. Regularly check your credit report. So you have to regularly means at least once in a year, once in a 6 months, you have to check your credit report. And then finally, take insurance against loans. You have taken a lot of loans, no? You have to take insurance loan. It will also help your family to stay worry free. So, adequate life insurance can provide a financial protection to your loved ones in the event of unfortunately something happens to you. And if you means somebody who's our taking, it is not exactly you. Something happens, unfortunate event happens like death. So you will get the entire amount of money from insurance, and our family can pay off the debts we have taken while we are alive. Life insurance proceeds can be used to pay off debts and other expenses, which can prevent missed payments and other negative impact on your credit score. So that's it, my dear friends, for this video. If you like this video, please subscribe, comment, share, and like. So thank you very much. Bye bye.